Hi, my name is Rich Olson from UKBA, and I'm here today with Elliot Harris to talk about risk for business. Over to you, Elliot.
Thanks, Rich. Risk is a part of business that most SMEs think largely about finance, but it involves so much more than this. There are really 5 categories of risk that businesses get involved with: governance risks, financial risks, operational risks, external risks, and compliance with law and regulation. And in today's session, we're just going to cover the first 2 and deal with the others on subsequent occasions. So I can move on to governance risks. What do I mean by governance risk? Well, essentially, every organization has to have some structure. Now, whether you're a sole trader, partnership, or a limited company will depend on what that structure is. But the key point is whether you've got the right organizational structure for your business. And also whether you've got the right skills or commitment within your business. Most businesses, you would hope, would have decent finance skills. Some people running their business will be particularly expert at sales, others at purchasing. Some will have property skills, others will have HR skills, and these days increasingly social media is a skill that business needs. But the question is, from an organizational point of view, have you got the right skill sets in the right places? You don't, as an owner of a business, have to have all of those yourself, but you do have to have good access to it, and that's part of your organization. Likewise, conflict of interest is a problem for SMEs, and in 2 ways. First is financial, and by that I mean, are you running the business purely for your own financial gain, or are you taking into account the business itself and its financial needs? So typically you have the situation where a private limited company, the directors might well strip out all excess profits in the way of bonuses or dividend. Now, is that right for the business? Also, from a personal point of view, you have to have the right work-life balance these days, in particular at times when COVID is affecting all our businesses. Are you putting the right right emphasis on your personal life and on your business life? And that can impact on the governance of your business. Have you got the right organization? Are you a sole trader? Should you be a partnership or an LLP? Should you be a limited company? Sole traders have very little constitutional base to their business. But for a partnership, you should have some kind of partnership deed. And for a limited company, of course, you would have a memorandum of association and articles of association, which govern the way that the business is run. And of course, you have to stick to those rules. If you go beyond those rules, you're operating ultra vires, beyond the powers that are given to you. And lastly, a social enterprise. Are you the sort of business that needs to be a social enterprise, particularly a community-based business?
Elliot, just a few questions around that. I mean,
Yeah.
You talk right at the beginning about inappropriate organizational structure, and then further on about sole trader versus partner versus limited company. I think very much the way the world has moved on in the last few years is there seems to be much more encouragement, probably the wrong word, but people are just so more used to setting up a limited company from day one than any other form of trading, it seems to me. But they don't necessarily think through actually is the rationale behind the decision. It's just we've operated a limited company, we know the protection a limited company gives us. At what point could you assess them and actually give them advice as to whether that structure is actually right for them?
Right at the beginning is the short answer, Rich, simply because it rather depends on A, the risks that that business is exposed to, because that can impact. If you've got minimal risk, then the protection of limited liability doesn't necessarily affect you, particularly if you have some kind of professional indemnity insurance involved. And also whether you're an expanding business. The more you expand, the more risks you're likely to take, and therefore a limited company may well be the right option from a risk point of view. Never judge it by a tax, for tax reasons, never judge it by size reasons, judge it by what your plans are and what potential risks your businesses are exposed to.
Yeah, that's a very valid point. Actually, it was interesting what you said about companies who are a bit more focused on removing all the cash from their business. It creates problems from further down the line when actually, for example, they're looking at fundraising and they want to go and acquire another company and they can't show the profits because they've stripped all the cash out of the business.
And indeed, this argument about dividend versus remuneration has impacted on companies in respect of their claims for help from the government.
Yes, absolutely. Yeah, no, very much so. I mean, yeah, it reminds me of a case I'm looking at right at this moment in time. But you talked right at the beginning about inappropriate. I don't know, how do you describe an inappropriate organizational structure?
Well, inappropriate, I'm not talking about being illegal or anything of that nature. I'm talking about what's right for that business. Mm-hmm. Different businesses need different structures. You know, if you're working in a family business, that's different between working in a business with 3 or 4 independent people, which is different from working in a business by yourself. It's what's right for that business.
Yeah, and the other interesting one you brought up was conflicts of interest. I've seen this happen in the past where directors have got together to form businesses where one of the parties has had their own company outside, which has delivered services to that company, and that can create all sorts of issues if you don't get it right and on a level playing field from day one with everybody's expectations set.
Oh, absolutely. I mean, in a limited company, you have to declare any potential conflicts of interest. But declaring it is one thing, actually managing it is quite another.
Absolutely, yeah. And I think that's where I've seen it go wrong before. Okay, pass back to you.
Financial risks are, again, the one that everybody thinks about. But what are those risks? Well, the first is you're not getting the right information, either because it's inaccurate or it's just inadequate for your needs. Believe it or not, these days, you'd think that every business would have management accounts. They don't. You would think every business would have a budget to compare their actual results. They still don't. In fact, they say less than 50% of all SMEs have adequate financial information. Reserves are another area. Again, I used the analogy previously about directors removing all the surplus profits in dividends and remuneration. They've got no reserves, therefore, and lack working capital. And of course, if you haven't got decent cash flow, you can't sustain the business. And of course, and indeed, during COVID, we all know that every business has been hammered as far as cash flow is concerned. But nevertheless, you've got to mitigate those risks. You can't just ignore it and hope it will come right. Likewise, having limited income resources, and by that I mean high dependence on, for example, one key client or customer. If anything goes wrong with that client relationship, either by virtue of that client's problems or actual relationships, you are going to come a cropper. So you need to have diversification of income resources. Insufficient insurance cover. People like to think, well, they do the best deal that they can to reduce premiums. or indeed don't have the right cover, it's absolutely imperative that you get that right, as many businesses during COVID have found out to their cost. And the obvious one of bank borrowing. Are you borrowing too much? Have you got the right combination of borrowing and loans? Can you manage the cash flow? Or if you look at credit control, have you got robust credit control procedures? Have you got the right stock control? Are you managing to operate on the right levels of stock for your needs without clogging up cash on the shelves? That's what I mean by financial risks.
I think it's some really good points there. I mean, the interesting one you brought up was insurance, because obviously during COVID, a lot of people found out the coverage they had wasn't worth the paper it was written on. Frankly, it wouldn't cover them in the event of COVID anyway. In fact, only companies who would get that type of coverage were the very, very large companies, if they had taken out an extension to cover it. So unfortunately, that was almost an act of God in terms of the insurance industry, and saving them quite a lot of money. The other interesting thing I've noticed is companies refinancing using the likes of Bounce Back and Sybil's loans has actually been quite astute in terms of looking at refinancing existing loans at much lower interest rates, and with 12 months period of time where they have no payments at all, which would seem to me to actually be mitigating that risk.
And that's a real positive.
Yeah.
But likewise, other companies have misused those Bounce Back and Sybil loans.
Yes, no, absolutely. And I'm sure there will be lots of cases coming out of people abusing the system and, liquidating companies and taking it to go and purchase houses or deposits on houses and all sorts of things that will come out of this eventually. And I know instances of that because I've had various conversations. So it will be interesting to see how this all filters through. I mean, generally, what do you say out of that lot there is the biggest single failing you see in SMEs today?
Believe it or not, inaccurate and insufficient financial information.
Yeah.
Reserves and cash flow, of course, are the immediate thing. But if you can't even get the right information, you've got no chance of managing your reserves and cash flow. Yeah.
Yeah, and I have to admit, bear in mind what I do for a living, I see that time and time again, where actually getting management information takes weeks and months to get the information out, which should be the press of a button. Yeah, which is really quite worrying. Okay, well, thank you for part one of this webinar today, Elliot. It's been really interesting. Just to remind you, it's Elliot Harris from the UK Business Advisors, and this is the first session on risk for business. Thank you very much. And now he tries to find the stop record button. Yay! There we go.